Good afternoon, everybody. Damin Murdock here from Lawpath Legal. I've got Pat from Pop Tax and Pop Business. So Pat is the director of Pop Tax, and Pop Tax is the individual accounting practice for individuals.
Sure.
And Pop Business is accounting practice for small to medium-sized businesses. Is that right?
Yeah, that's right.
And in the past, you have experience from Pitcher Partners, one of the bigger accounting practices in the country. And do you want to tell us a little bit about your business generally?
Yeah, sure. So we're an online accountancy firm, and we work with businesses right across Australia. And it's an exciting time to be transacting with businesses. It's been a really challenging time, which we'll step into, but nevertheless, it's been really rewarding to be able to help businesses through this year. And Damin Murdock, welcome. So you're the director of Lawpath Legal.
I am.
And you've helped hundreds of businesses with their legal needs and assisted businesses with millions of dollars worth of startup capital raising, amongst other things.
That's right, yes. Now, just for everybody out there, if you've attended these before, as you know, we're always interested in you asking questions as we go. Let us know where you're from, what state you're in, what business you're doing, whether you're a startup, whether you're a couple years in, and Pat and I will try to tailor some of what we're talking about today for you. So I guess without further ado, we'll start going. Now, Pat, 2020 hasn't been very good. Well, for some, it hasn't been very good, and for others, they've been able to take advantage of the situation a little bit. Now, you're not a standard accounting practice. You actually have a tech team or a dev team in your practice. And so you would know about technology as well as accounting. Most accountants are fairly boring. And as you as an accountant would probably say as a lawyer, we're not very much like an accountant. We're polar opposites sometimes, but we work together. So tell me a little bit about 2020, what you've seen.
Yeah, certainly. So 2020 has been a really significant year. We've had, forced lockdowns, non-essential travel banned. We've had the small business market being really challenged and needing to adapt. And we've seen some really interesting things in the market, especially with our client base, and that is the digitalization of businesses. So a lot of businesses have moved online and been transacting online a lot more, getting their systems, processes up in the cloud, using different software to automate different parts of their business. And I think that trend's going to keep continuing with the rise of AI and the growth of the speed of technology increasing. So it's probably been a good time for a lot of business owners to focus on the digitalization and getting their business online in some way, shape, or form. We've seen a lot of reskilling and retraining of employees, which has been quite a good process for a lot of businesses. And a lot of business models have changed and shifted slightly, which has been really interesting. So adopting new revenue streams, new services, new product mix. And some businesses have really stripped back their businesses to their core offering. So we've seen both. We've seen businesses really evolve and change their offering based on the current market.
And I guess as looking at this industry, I didn't really hear of Zoom in January, but then all of a sudden Zoom's the biggest thing.
Right.
Now, if you look at some of my clients, they've started to pivot. And so they have cut the fat, they've cut some of their staff, unfortunately, they've possibly given up their lease, they've gone work from home, move into co-working spaces. And what I've been finding is that everybody's focusing on their core.
Sure.
And they're getting rid of the little side project that they were doing before. They've kind of got away from that and they've focused on what they're working on, their main core business, or they've pivoted completely. What kind of businesses have you seen start appearing that you might not have seen before in 2019?
Yeah, it's been an interesting mix. We've seen a lot of digital style businesses, a lot of e-commerce, a lot of online businesses. We've seen some data analytics companies and some AI businesses popping through. But I think just in general, there's just been a big increase in businesses coming online, and it can be your tradies, your professional services, your consultants. They've really embraced the digital technologies available, and there's some really neat software that can change how the business operates, and I think people.
So we act for a lot of businesses which are similar to Lawpath, kind of like an aggregator of law firms or aggregator of accounting practices. But I'm also seeing the telehealth, but then I'm seeing teledental, and then I'm seeing cosmetic surgeries for like lay-by surgery. I'm also seeing tele-veterinary services. And then so all the marketplace, it seems to be more opening up more as well. And there's a lot more of these online marketplaces.
Yep.
They're doing the introduction and the taking a clip basically. Have you seen any growth in that sector, or is it mostly just, AI and analytics?
Yeah, pretty much all businesses. And I think, as I said, like even physical businesses where you need to transact in person, like we've had hospitality businesses doing deliveries. We've had just such a change in the dynamics of how businesses operate. So it's been pretty much across the board where businesses have shifted to the digitalization. And I mean, moving on from that, what trends have you seen apart from those things?
We created a cybersecurity team. So we've got Paul Senos, who's comes from a privacy background. He was actually from Washington, D.C., doing polling in Washington, and then he's come over and he's been heading up our cybersecurity, privacy policies, and GDPR and things like that. So we've been finding a lot of that kind of work growing. We also find the loyalty platforms. Everybody's getting ready for when the market opens up, so they're starting to create the loyalty platforms and the integration of all their data into those platforms. But let's talk about 2020 generally. You have JobKeeper 2.0. What kind of stimulus packages exist now for those who have fallen off of JobKeeper?
Yeah, so there's a few available now. I think most businesses did fall off the JobKeeper, which is hopefully a good thing because the revenue isn't down as significant as it was before. And we did see in that September quarter some really strong growth. And technically, we're sort of moved out of a recession, which I think is a great thing. So stimulus, a job maker. So if you need to hire someone, if they've been on Centrelink benefits for 4 weeks, you can get $200 a week if they're aged 16 to 29. And if they're aged 30 to 35, it's $100 a week. So the enrollment for JobKeeper is now open. There's the apprentice and trainee subsidies, which subsidize up to 50% of the wages. So that's been quite good. We've had a number of clients accessing that.
And does that apply to existing employees who currently work in the business, or is that just new hires?
So that's for existing as well. So it's for apprentices and trainees.
And before this, we were talking about how you're seeing a lot of people upskilling and training. Do you want to talk a little bit about that as well?
Yeah, I mean, there's plenty of benefits to upskilling and training and existing employees. And I suppose you're only as good as your team. And with the business models changing, there's been shifts in the way people do business, and there's been shifts in their day-to-day activities. But just coming back to the stimulus for a sec, there's the instant asset write-off, which if you're acquiring an asset, $150,000 up to 31 December. There's accelerated depreciation. So if you do purchase the asset after 31 December, you still have high depreciation rates, like up to 57.5% for a business, small business pool, or 50%.
So would you say that, let me just clarify that.
Sure.
So $150,000 instant write-off if you buy before the
31st of December. Yeah.
So go out there and buy non-luxury cars now. Is that
Well, the
right?
cars have the cap, so you can only write off vehicles up to 57K.
Yeah.
So yeah, look, it's they've tried to stimulate some spending in the asset purchasing environment.
Yeah.
Other stimulus right now, there's some small business COVID loans, unsecured, really cheap interest rates, but it is still a debt. You've still got to repay it, and so you've got to be really careful not to.
Is that so? There was one, and then they've introduced another one. Is that
Correct.
still 250,000 unsecured? The government guarantees half of it or all of it?
Yeah, so there's 250K. They did increase it up to $1 million.
Okay.
However, the requirements changed a little bit. So up to $1 million, they have a right on future revenue, whereas up to 250K, it's kind of like a personal director guarantee.
Yeah.
So a little bit different. Terms are the same. The initial one was more like a line of credit, and you could basically, you'd only pay interest on the drawn down amount. What we've seen now is it's just a general loan repayable over 5 years. So you start making repayments from the get-go.
Now, as I mentioned at the beginning, we always like you guys contributing and asking us questions, and we can answer your questions. And one of the questions that Warwick's asked is, how have we been generating business during 2020? Now, Lawpath Legal is the largest legal tech platform in the country. Good for Lawpath Legal, but we were probably the only Lawpath, or the only law firm, or one of the only law firms that were really well placed for COVID. We have staff that already work remotely. We have several offices, and we're backed by technology. So when COVID hit, the actual work just started coming in. And you'll see that because of the people that were made redundant, we have a lot of the trends of 2020 for us has been, rather than a uni student who went out and rather than getting a job, just go straight out of uni and starts a startup. What I've seen is the people that are actually incorporating the companies now, they're actually very skilled, very experienced, and have been forced to start their own startup because they have been unfortunately lost their job. Have you seen anything about company registrations, or have you seen any increase in the new companies and what kind of companies are popping up?
Yeah, certainly. Just to that point, how have we been generating business? It's been being online. So we've been focusing on content. We've got a content strategy, kind of being an authority for the government stimulus and various things. So trying to let people in the market know what is actually happening. So focusing on our SEO strategy, our content, trying to provide value to people. And I think that's really important is creating value, which in turn creates business. Partnerships have been good. Some digital ad strategy has been working. So we've been doing a bit of a suite to get clients. But as Damin said, we're kind of similar how we've sort of set up our business being predominantly online. And that's kind of allowed us to get to sort of be in front of clients in a time where they were searching for that online accountant.
And I guess, Warwick, an example of what we're doing to generate business is possibly this webinar right now. Now, when you look at the SEO content, when you do videos, you can actually hire companies to transcribe the actual video. And then with that transcription, everything that we say, have a transcript, which ends up becoming really searchable, and it improves your SEO just generally with videos. And one thing over COVID, we've done about 30 different videos, and that was to add to our YouTube channel and add to the SEO content as well for the website, which increases us and gives us better. Have you done videos as well?
Yeah, done some videos, done some podcasts, got some things out on YouTube and various places. So I think content's key, and building a really strong referral network is key, and transacting with, creating relationships with businesses that have complementary services is quite key as well. But new business registrations, just to touch on your point, you said there's a lot of, I think we heard there was a 50% increase in business company registrations between, was it June and September?
Yeah.
Something like that. So that's really interesting that businesses, a lot of people are setting up their businesses. And for new businesses, as I said, it's just such a wide range. I think you said you noted the trend of a lot of professional, really experienced people starting their own businesses due to, being made redundant or laid off, and then they've got these
and highly technical,
really good at what they
very
do.
Niche businesses starting out. Yeah.
And I suppose some things they could be doing when you first start a business, the foundational stuff's really important. So getting the right structure.
Let's get into that. So obviously we're just having a chat at the moment, but let's get into giving some good advice. So people have been running their business in 2020.
Yep.
We're leading into 2021. A lot of people have just started a business. We've had double the amount of registrations, as you mentioned. As a new company, whether you've converted from sole trader or a brand new company, what are your checklists, what your tick box that you want to look at and what you would recommend?
Yeah, sure. There's really a few key things. I mean, there's so many things you could do, and a lot of them aren't accounting related. However, I think the main thing is the first starting point is getting the structure set up right, making sure your personal assets are protected, making sure you've got a structure that works from a tax perspective, and then also your future plans. So your structure is really key. Making sure it's simple things as well, splitting out your personal expenses from your business expenses and income. We do see a lot of people come to us in a year's time and it's all together, and it's really hard to work through it. It's time consuming. They don't know where their business is at throughout the year, so they're missing a lot of potential opportunities. They can't rely on the data. So making sure it's separated, making sure you've got an accounting software like Xero. Xero is an accounting software that's really great. You can the packages start from $20 a month for starter packages with our 20% discount. So Xero is a great accounting software. Making sure you understand your reporting obligations, so your GST, your PAYG withholding, your tax returns, when are things due, if you've got employees, your super contribution requirements. So there's just quite a lot to think about, making sure you understand all your reporting obligations, and having the right team is critical. So making sure your legal, you're set up correctly for all your legal and your accounting. And I suppose what we did, we flipped the model of being a really reactive accounting firm and speaking to you once a year and doing your tax return and your financials and seeing you in a year's time. We tried to flip the model, speak to you monthly. We've got a ton of expertise, so we speak to business owners more often and try and provide ongoing support and advice to help businesses grow their business. So I'd highly recommend having the right people in your corner to help you move your business forward. Yeah. And from a legal perspective, what do you think business owners should do as a starting point?
I always say, if you're just starting a brand new startup, you want to look at your corporate structure. If you don't know whether your business is going to be that successful just yet, I always say, well, just start up a fresh PTY LTD. Don't overcomplicate it.
Yeah.
One thing I always remind them is that you have your R&D tax incentive. So if you're actually doing development and you're doing R&D, make sure that you're keeping time records, making sure you're recording everything, because you might be able to do an R&D application at the end of the year.
Yeah.
But then once you have a proven product, once you got your MVP going, then I would say look at possibly a corporate structure. So it might be that you want to create your family trust. It might be that you want to create a separate holding company for your IP, or a holding company with a subsidiary underneath it, which is your trading company.
So it's a dual company structure.
Dual. And that's the easiest. And I always say one thing that's important as well is, if you have a holding company and it's licensing the IP down to the trading company, if anything ever happened to the trading company, if it went insolvent or a liquidator was appointed, you want to be able to claw back all your IP. So you create a license agreement. Mm-hmm. Now, that's deemed a related party transaction. And oftentimes a liquidator can basically deflect a related party transaction. But there's a Personal Property Security Act. And so if the holding company has a license agreement and then registers a charge against a subsidiary, that will defeat a liquidator.
Okay.
So I always recommend, if you are going to do that dual structure, make sure you have a license agreement, make sure you register your charge against the subsidiary, so that if something happened, you can gut the company of your assets, and revert it back to the holding company. Other things is looking at employees. We had this big WorkPack case. So for those who don't know, WorkPack case is a federal court decision. You might have seen it on the news. In essence, there was a casual worker. That casual worker was working 7 days on, 7 days off, systematically, regular. And they ended up taking WorkPack to court, claiming that they're a permanent rather than a casual.
Yeah.
WorkPack said, well, they're not a casual. They've been paid casual rates. So they have a 25% loading on top of their normal rate. And it specifically says in their contract that 25% is in lieu of employment entitlements. So as a casual, you don't pay long service leave, sick leave, carers leave, public holidays leave, compassionate leave, annual leave. None of that applies to a casual. But the court found that because that was on a regular basis and it was for a predictable schedule, that person was deemed to be an employee on a permanent basis. And from the date they became permanent, WorkPack had to backdate all their entitlements. So then they counterclaimed and said, well, we shouldn't have to pay 25% loading plus all the entitlements, because that was to cover the entitlements. And the court said, no, the casual is allowed to double dip. So not only does the casual get paid 25% more, they also get all their entitlements on top. And all the lawyers have been in uproar saying this is ridiculous, but what it does mean is that if you do have any casuals, you better get it sorted. And right now over Christmas is a good time to figure that out. And if they have been working for more than 12 months, you should probably consider making them permanent or talking to a lawyer to see whether you should make them permanent, because you're opening yourself up to a lot of liability by not doing that.
Yeah, and that's really interesting. And with that, what about all those larger hospitality entities and other entities within the market? Are they liable for the back pay, or is this an individual case and they need to get
No, it pretty much applies to any casual. I think what the judges were trying to do was to say, this is what the legislation says, and this is how we apply the legislation. And if that's not what the legislature wants, go pass a new law to deal with it.
Yeah.
And I think that's what they actually are doing right now. They're looking into changing I think the Fair Work Act to say that if you've been employed for more than 12 months, you'll be potentially deemed a permanent. So that's a new law that's coming out. But for those that have casuals, I would be looking after yourself and make sure you consider whether you should put them on permanent and change their structure.
Yeah, that's interesting. And what I get from that is the contract doesn't hold much weight then. If the contract was clearly specifying that there was an increase in pay due to the in lieu of, say, annual leave and things like that, what you're saying is potentially the activities will override the
That's right. And that's the same for a lot of things. The same with the casual, or same with the contractor as well. So you have the ATO as something called a deemed contractor or deemed employee. So even though you've hired a contractor and that contractor has a clear agreement and they have an ABN and they issue an invoice, from an ATO perspective, from an accounting perspective, the ATO can still require you to withhold their tax and pay their super, even though normally with the contractor you don't have to do that. But
it's quite, and I think if a contractor's kind of PSI, personal services income, contracting to the one person, it's regular, then the employer certainly will be potentially up for the superannuation on top of the contractor rates as well.
That's right. Yeah. 2021. What do you see? What's your trends? What's the plan?
Before we jump into that, do you want to talk about was there any changes in the Corporations Act? Did we?
Oh, well, right now, so during COVID, they changed the Corps Act, and they basically said that, so there's something called a stat demand, and then there's issuing legal proceedings and letter demand. So to collect debts, you can do it two ways. One, you can, if you have a disputed debt, so the other side says, we don't agree with this, then you'll issue legal proceedings. Once you issue legal proceedings, you get your judgment. Now you have a certified judgment, and you issue a statutory demand.
Yep.
And that statutory demand will then give the other side 21 days to pay, or they can be wound up, and you can appoint a liquidator to their business. Now, if it's a non-genuine, or there's no genuine dispute, and you delivered a good and they haven't paid you, and there's no reason why they haven't paid you, or they've omitted liability, then you can skip the court proceedings completely, and you can go straight to a stat demand.
Okay.
And the statutory demand says, you owe this much money, you must pay us within 21 days, and if you don't pay us in 21 days, we're going to apply to the court to wind you up, appoint a liquidator, sell your assets, and pay ourselves. But during COVID, they changed it so that 21 days wasn't 21 days, it's 6 months, and they changed the amount of the debt to 20 grand. Now it's all reverting back on the 31st of December. So what that means is there's a lot of these zombie companies out there who have just been receiving the job keeper payments, but aren't actually making much revenue, but they might have a lot of assets. So on the 1st of January, if you're the first one to the race, then you can issue your stat demand, and you'll be the first one probably to get a negotiated payment. And if you don't, then you'll be able to get a liquidator in and take their assets. And a lot of people have been waiting for this, so there'll probably be a fury of debt recovery starting on the 1st of January against these zombie companies. And so if you do have any debtors, then I recommend you be the first one to start chasing those debts, and don't let the other parties beat you to it.
Yeah, that's really interesting. And is that part of the wider picture for the insolvency law changes, or is this just...
So during this period, it was the same legislation. It also said that if you are running a business at a loss, and it's because of COVID, then normally Section 588 of the Corporations Act says a director is personally liable for insolvent trading.
Yeah.
So you enter into contracts when you know the company can't pay it, then the director can be personally liable for that contract. They have put in some protections of personal liability of directors during COVID, and that all comes undone as well. And same thing with bankruptcy. So it was, you could issue a bankruptcy notice on someone if they owe you 5 grand, they upped it to 20 grand. And it was also a 6-month payment instead of 21 days, and they're reverting it back as well on the 1st of Jan.
Cool, makes sense. Great, and I suppose, 2021, what can businesses be doing to get ready?
I always like taking the opportunity to look at your business from a high level over the holidays, whether you're sitting at the beach or whatever, but you can just think about what you're going to plan for 2021. And a lot of it comes down to looking at your corporate structure. Is it time to restructure if you have a simple structure? And that's because if you have your shares in your business in your own name and you want to create a family trust and sell your shares to your family trust, there could be a capital gains tax issue. So you want to do that before you're making big revenue to save on the capital gains tax. I also like to talk about getting investor ready. A lot of people have been building and building and building during COVID, and now they want to get investor ready. And if you look at the property market, it's been uncertain. If you look at all the markets, it's been a little bit uncertain. So a lot of the investors, I believe, will be looking to well-established reoccurring income startups, especially tech startups with have large multiples and have proven capabilities and proven revenue. So I would think that a lot of investors will start investing again in around March. And normally when we do cap raises, you normally don't get much done between December and February. Mm-hmm. So it dies out. Yeah. And you get all your transactions through in November or at the end of, or the beginning of December, but there's not much happening in January, February. So to get investor ready, it's looking at your constitution, looking at your shareholders agreement, making sure you have a shareholders agreement, getting your corporate structure right, looking at your asset registry, making sure that's up to date, looking at your employment contracts, looking at your standard terms and conditions. If you're owed a lot of money, it's probably because your standard terms and conditions aren't any good and you actually don't have proper provisions in place, or you're not creating a wallet where they have to pay you in advance, or it's not, you don't have a merchant banking facility set up, or you don't have a credit application set up where the director could be personally liable for the and that's mostly in trades, for instance.
Yep.
So it's just looking at your business and looking at what the actual key points are that are failing, and what are the key points that are winning, and figuring out how you can improve those issues.
Yeah.
And the debt recovery is probably because of your terms, the employees is probably because of your contracts and your internal policies, and then your structuring is more of getting ready for the investor.
Yeah, that makes sense. And I suppose from an accountancy perspective, there's, as you mentioned, it's a good time to reset and recharge. But in the new year, you definitely want to have your financial records up to date and live. Make sure it's all online. You want to have accurate and reliable data to make decisions from. We found this year specifically, we found a lot of businesses doing cash flow forecasting and doing, with the rise in automation in the accounting software, the financial reporting is getting a lot better. And with that becomes some really interesting insights to grow your business and increase efficiencies, productivity.
Are you using Excel spreadsheets, or are you using a good software or add-on tool to Zero? Or?
Yeah, a bit of a mix. So it depends on what we want to track. We've got Spotlight Reporting and Futurely, which are great for some KPI tracking and analysis. But we also do use Excel for various things. But I think the key is for the new year, it's really making sure your financial records and reporting is up to date. Knowing what metrics to track is really important. So we speak to a lot of business owners, and we add a lot of value by just really defining what metrics matter and what metrics they need to be tracking to move their business forward.
And if you're preparing a pitch deck, this is one of the most important things.
That's right.
If you have projections, what is it based off of? What's the formula you're using? Who's done it?
Of course, your assumptions in a financial model. So it's really interesting, like what's driving your revenue, and people when you start breaking it all down, there's so many different things that can contribute to your sales and your revenue. And by modeling that, it's really interesting to see where you can make improvements. And
now, commercial leases, work from home. Jackie has asked, what do you see happening in 2021 with offices and remote working? Will the CBDs be bustling again? What's your thought on that?
Look, it's an interesting question. I think I'll speak from experience. So our business, we're doing flexible working arrangements, and we'll continue doing flexible working arrangements. We still like the team to come into the office because we feel that it builds a team culture and people get to see each other and connect, which I think is really important. But on a larger scale, you're seeing a lot of businesses saying they're going to keep adopting the flexible working. Commercial, I think that there's been some changes within the market that I feel like I'd be really surprised if it reverts back to how it was before. But in saying that, I still think businesses do like to have that central place of location to come and interact and, build that camaraderie, which is really important. But flexible working arrangements, certainly, I think they're definitely here to stay.
Yeah, I was talking to my business partner the other day, and they are swamped with commercial leases. So everybody's either signing up new commercial leases, and they got out of their old leases, and they're signing up. So I think the cities will be back bustling. Yeah. What I also think is that the square meterage of what they're getting is going to be smaller, because now you have work from home 2 days a week or whatever it might be, but you don't necessarily need as big of a space.
That's right.
But my clients who have a sales team, they need to have their sales team in the office because they feed off each other.
Yeah.
And they can't have half their team working from home. So they need to be able to feed off each other. Same with the dev team. All the software developers, they normally want them feeding off of each other and running ideas past each other. And it's just, you can't do it any other way other than in person.
There's a lot of collaboration required to do the build. So I suppose it depends on the industry. But I would strongly think that the flexible working arrangements are definitely going to be around for some time.
Yeah. All right. Well, 2 takeaways, and then we'll take some questions. One from me, one from you. What do they do to get ready for 2021?
I think the right thing to do is you're only as good as your team. And I think leading into the new year, I think the most important thing is to make sure you've got the right accountants, the right legal, to make sure you're giving your business the best chance of success. Having that expert guidance throughout the year adds a significant amount of value to your business. So apart from just making sure your lodgements are done, doing all the planning, setting up a forecast and making sure you understand what your goals are for the year and where you want to get to, I think the most important thing, to be honest, is just making sure you've got the right team, and that's not internally. That can be, that could be accountants, could be legal, it could be otherwise. But I think just getting your team right will have the most impact upon your business success.
Yeah.
And for you?
I would say look at your employees and consider whether they're casuals or permanent, whether there's any redundancies that need to happen, unfortunately, or whether there's some growth. Making sure that you have non-solicitation provisions in your contracts, possibly restraint of trade, good confidentiality, good IP clauses dealing with your staff. Look at your corporate structure. Make sure that if it's time to restructure, do it now. Look at your brand. You look at your trademark. We're finding a lot of copyright infringement and trademark infringement right now. So get a trademark. And then if you have interrelated loans or interrelated license agreements, make sure you're lodging a PPSA against your subsidiary to make sure you have that charge that's going to defeat any liquidator or other unsecured creditor. And that's about it. Now we'll put it back to you guys. Do you guys have any questions for us?
I see a couple of comments. The rate per square meter, it's already come down a lot. We were looking at some spaces recently, and it was it's changed a lot in Sydney, and I dare say in Melbourne even more so.
And what's interesting is that if you look at the advertisement, they don't necessarily come down a lot.
No,
but if you call the agent,
they're
desperate. They're desperately trying to do a deal, and they will offer very big incentives, big fit-out contributions, and rent abatement.
Yeah.
And so if you might sign a lease for X square meter, but then they'll do a deed giving you the under the table deal so that it's not in the public domain. And just to look at like Surrey Hills, we're in Sydney. I think it's gone from about $500 to about $300 per square meter, and I think the Sydney CBD has gone from it was at one point $950 to $1,000 per square meter, and it's gone down to, in certain parts, $750 or even lower. But still the big premium buildings aren't budging a lot, but they're also much bigger square meterage offices as well.
Yeah.
All right. Well, if we don't have any questions, then we'll ask Lawpath if they have any questions for us. So Gary says on IT, can you do a dual protection? Check new government department on trade, etc. Not sure if I understand that question. Gary, can you clarify that? One of the things that we do get a lot of questions about is when you have people working from home, they're working full time for their employer, and then they're doing a side project. And when they start doing that side project, they don't intend to be having a conflict of interest, or they don't intend to be infringing upon the technology that they're working in at their company, but it's just natural where you're taking ideas across. So one of the things is to make sure also in your employment contract, or even if you don't have employment contract, create a conflict of interest policy.
Yeah.
So that you say that if you have a conflict, you must disclose it. And if you do get suspicious of an employee possibly taking an idea from you, you can do a personal search with ASIC, and you can look to see whether that person is a director, shareholder, or secretary of any company at all on the ASIC register ever. What should I do about outstanding invoices for businesses that have suffered under lockdown? If they don't pay me, what is my recourse? At the end of the day, the reality is if you push too hard, you're going to push them over the limit and you're not going to get any money. And enforcing a judgment is sometimes much harder than actually getting a judgment. So I normally say if you're better off taking what you can get than taking nothing, or spending a lot of money on lawyers to try to enforce a debt that never ends up coming to fruition. So my recommendation is that if you're going to allow someone to not pay, that's not the right thing to do. It would be try to get them to agree to a payment plan. And if they are going to agree to a payment plan, then you need some kind of security. So a personal guarantee from the director or interest payments on top of the debt so that there is something. And there's different companies that do direct debits straight off the credit card every month. The one that we use is Easy Debit. I don't know them, I'm not promoting them, but that's just one of the companies that do the automatic taking out of a credit card. And so we do a simple payment plan with a personal guarantee and an Easy Debit application. And then we just take the money off month to month. And if it doesn't come through, we get an email telling us that there's been a default. And if there's a default, then your payment plan says automatic default, and you can go straight in against the director personally if you have to.
Yeah, we've had a few clients in that position where they haven't been able to pay fees, and the simplest thing we've done is exactly what Damin said, and we've got payment plans in place. I think the main thing is it depends on the relationship you have with them. If you know them and trust them, then you can work a lot more closely trying to get a result on payment. If you don't know them, it depends on if are they ghosting you? Are you having good conversations? Is there future work opportunities? So I think the first point of call is certainly just getting in touch with them and trying to negotiate something reasonable to allow them to make payment without going down the legal route. If you did go down the legal route, then of course there's the letter of demand. There's quite a few avenues, but I would just strongly suggest trying to work with them to receive payment, whether that be a payment plan or whether that be some sort of negotiation on the amount. That's
I always say that the greasy wheel or the squeaky wheel gets the oil, right? So if they are ghosting you and they're not paying you, it's because they have a lot of other debtors. So you might as well go hard and try to get paid before the others do. That's generally, so it depends. It's either work out an agreement, but they ghost you, go hard, be the first one there, and hopefully they settle with you and don't pay the other creditors.
Yeah.
Now we have a question here about working from home. So filing your personal tax returns, what kind of benefits you can get, what kind of write-offs there are for people working from home. You cross those?
Yeah, of course. So there's basically, when we're talking about working from home deductions, it's classified as two separate things. And so you've got occupancy costs and running costs. If you're trading out of a business from home, generally you can deduct a lot more. You've then got to look into, is it your principal place of residence? You might be losing capital gains tax-free exemption if you start trading and deducting business deductions for your things like your interest repayments and stuff like that. You can claim deductions if you're an employee working from home. The ATO had some increased rates per hour to make those deductions. Claiming a percentage of your running costs is possible. Things like electricity, potentially some wear and tear on some of the assets there. You do need a dedicated space, home office space, to do the percentage of the running costs.
So if during COVID you bought a new office chair for home, is that going to
Yeah, so you could potentially depreciate that based on its business use percent. I haven't seen anything that the government's coming out regarding sort of additional deductions, but they may still do so. So we'll wait to see what happens next year regarding additional stimulus. Bonuses and stuff like that, it's really up to allowances and things like that. It's up to the individual employer as to whether they want to compensate employees for their use of working from home. So employers might be inclined to pay an allowance. So that's really employer specific. And from a government perspective, there was the increased rate for the deduction. And I suppose next year we'll see if the government brings out any additional things for employees working from home.
Now we have a quick question from Marketing Ideas. So there's your plug. But he's basically saying, or he or she is saying, do I hire a contractor or a casual? What's the difference? And whether the benefits. It's very hard to answer because I don't know necessarily what Marketing Ideas does. But at the end of the day, you got to look at, there's about 16 different factors. So if they're providing their own tools of trade, so they have their own laptops, they have their own computer or their own phone, own car, if they get to choose all their own hours, if there's little control over how they operate, things like that, that's more inclined with a contractor. They have their own ABN, if they have their own company or contractor. If they're doing business for other businesses and they're running a business, then they're more likely a contractor, whereas a casual is more along lines of doing random shift work or rostering, and you're issuing a roster rather than a project by project. So if you're an electrician installing solar panels, you're unlikely to be hiring a casual to be doing the installation because you have to have your own professional indemnity insurance, you have to have your own licensing. So you're more likely to be a contractor doing that. So you got to look at the professional indemnity and licensing requirements as well to determine whether it's a casual or contractor.
Yeah, technical ability comes into it a little bit, and how important the role is for the business, whether you want to have accountability on their role, so whether you want them to be liable for their work. So if you're hiring a casual employee, you can have KPIs for your employee, but it's like an internal thing, and how hard you can hold them accountable for that is a bit vague, really. So they're going to get paid anyway. They're getting paid an hourly rate for showing up, basically. Whereas a contractor depends on, you could make it project-based, you could make it performance-based. So a contractor, it's a different role. A casual's an employee style arrangement, and if they're not part-time, their hours are ad hoc, and their their roster's uncertain. If you want someone technically to come in and do something in your business, or something technically for clients, and you want to have some sort of you want to have really ensure that quality is maintained and have some sort of recourse, you'd have a contractor.
All right, well, let's go through these slides that I didn't go through. So very quickly, that's myself and that's you. And that's an introduction to us. Now, we have some end of year specials. So why don't you talk about what you guys are offering?
Yeah, sure. We had a Black Friday special, and that was quite successful. So a lot of businesses jumped at that, getting a significant discount on their 2020 accounting and tax and prior years. So if you haven't done your tax returns and your accounting work for the 2020 financial year, strongly suggest getting in touch and having a look at this deal. And we also have an advice plan to get in touch with you throughout the year to make sure your business is moving in the right direction and provide that level of support. And so we've got a discount for those two things. And yourself? And
does your legal advice plan, is that similar to our legal advice plan?
It's quite similar. So it was a product that got created out of a need for especially new business owners that needed that level of support and advice, that didn't want to get billed at high hourly rates. So we tried to create a really affordable package, and provide support on a fixed ongoing basis. And it's really about building the relationship, getting to know your business, and then advising accordingly to help you go forward.
And that's what Lawpath offers as well as a legal advice plan. In essence, talk to a lawyer on any new legal issue for 30 minutes, review some of your documents as well, up to 4 pages. And then we have a series of different commercial lawyers, including myself, to take those phone calls and give general advice and give guidance and answer questions. And it's almost half price at the moment, the Black Friday deal. So it's about $69 a month. When I normally charge $5.50 an hour. So it's pretty good to talk to me for half an hour for $69 a month. And so they're offering it for, I think, $588 a year. So pretty cheap. And they got a lot of people that took it up on Black Friday. So I'm a little bit surprised that they're offering it again, but they are. So good deal. And so if you're looking for a lawyer in 2021, then there's a good deal for you. And that is being offered by Lawpath.
Excellent.
And Gary has said that Lawpath has been terrific. So there's your review right now. So if you haven't got it, then you can do that and talk to me in